or telechart, they have all of these are inside of each of the software pieces, but the components, the beauty of it to me is that let's just go back and say that I did this watch list about 2 weeks ago, because what's been in the news a lot relative to China has been currency and whether or not China's doing right or wrong, and I don't really care, because China's not going to send me any money, so I got to make enough money to pay my bill from China when I import inflation, because the Fed's decided to devalue the dollar so that it's worthless, so that we import inflation, but we don't have any inflation. How can crude go up from $45 a barrel a year ago to $86 a barrel today, and we have no inflation? I want to be on I call him Ben Bernanke and the 12 Dwarfs, because what are we looking at that we can say there's no inflation in this country? Have you looked at corn? Look at this ETF right here. I mean, look at what's going on. Wrong one. This is sugar. How many of you use sugar? I mean, sugar has gone from 35 to 95. If I put corn up there, it's doubled. If I put wheat up there, it's doubled. How can you have doubles in inflation and no inflation in commodity prices? It's coming. It's going to back up to the grocery store nearest you. We're already seeing it. So these are all ideas that every day, all I do is sit down and say, all right, what ideas can I find out here that I can invest in? And how did I get to this point in my life? I've been a trader for 35 years. I've done this professionally for 30 years. And how I got to this point was I decided I made this way too complex. I made it way too hard. And what I started to do was say, when I look at the fact that semiconductors are leading the market, should I own semiconductors? Sure, let's have a few shares. You can buy SOXX, which used to be IGW, which is the iShares Semiconductors ETF. If you're really a sadistic person, you can buy SMH, which is the holders put out by Merrill Lynch, which no longer holds all the semiconductor stocks because they've either merged, gone out of business, or been bought out. And the semiconductor holders ETF any longer. The Dow doesn't have as much volume, trades about 160,000 shares versus 2.5 million for SMH. But I still would rather own SOXX because I get a better diversified portfolio. I also can go inside of SOXX and I find 68 stocks that I can scan and find Marvel. I can find network appliances. I can find all the stocks that started to move out of the semis. Some of those stocks went up 100, some of them went up 300% as semis were running over the last 6-8 months, and you could have made money from them. And so what's interesting to me is no matter what you use to scan the market, the smaller the bucket you're scanning, the easier it is. The bigger the bucket, the longer the back testing, the more effort you've got to put into this. What happens between these two things? You get confused, don't you? You start to question. And you start to get, I've always called it paralysis of analysis. Has anybody ever gotten that? How many of you have ever gotten a signal to buy something and looked at it and go, that can't be right? It's just not looking right. I'm going to wait a day. And the next day it goes up 16% prior to the open. Guess what? It was right. And what are you doing? You're kicking yourself. And the key to me has always been, how do you put the pieces together? It's more of how do I find a way to scan and build the market. So what I have done is just nothing more than this. I'm going to go back to this right here. Can everybody see that okay? This is a list of 50 most popular ETFs. These are the largest ETFs. They're the ones that they're largest by size, which also means they have the largest volume. So I don't have to worry about volume, and I can scan this. You can see that we have scans set up here. We've got all kinds of things down here. If I highlight this, you can see this is one of my favorite scans, is the 10-day moving average crossing through the 30-day moving average. And it's so simple. There's nothing magic about it, is there? But what's interesting is that when you start to find opportunities within the market, and we will find opportunities, you can see here the opportunity is when it's crossing down, I can go short. When it's crossing up through it, I can go long. And the longer it goes, what starts to happen is the 30-day moving average, which here is the red line, generally will become support. Meaning that if price breaks back below the 30-day, it's an exit signal for me to get out. It's just a simple strategy that I designed 25 years ago that still works today. There's nothing magical about it. It generally will call tops and bottoms of the market, doesn't call them precisely. How many of you believe that you can call that this bar right here on the Dow Jones Industrial Average is the bottom of that movement? Now, looking back, absolutely, all of you are very good at that. But if I use magic and I move this forward, how many of you can tell me that where the bottom of each of these bars are going to be? You know, where's the bottom of this? How do we know? How do we know the market's going to run 20% off of the bottom? You don't. And if anybody thinks they have a system that says they do, run. Don't get me started. Does anybody know what happens to prophets? Remember in the Old Testament when they had prophets? What'd they do to them? They usually crucified them. So if you see somebody claiming to be a prophet, I don't think anybody's going to crucify them other than the market. At some point, you're going to get crucified because, you know, greed is ultimately going to knock you out of the box. So when I look at this, I look at for right now, what am I scanning for right now? I mean, if I were an investor today, what's the most obvious thing to be looking for? Help me out.
Trend.
What kind of trend?
Any trend.
Okay, what kind of trend are we in?
Right now? Oh. You're sideways. He's down now. We don't know. You think it's up?
Up. There we go. You're right.
Oh, I forgot about Bernanke.
We're in an uptrend. Has the trend line broken? Where?
Not quite.
Is that trend line broken? It's not broken. It's close. But close only counts in horseshoes and hand grenades. Because if you can throw a hand grenade close enough and it blows up, it'll probably hurt somebody. But a pure technician will tell you that that trend line's not broken. But most of us aren't pure technicians. We're fudging technicians. We fudge. It's close, I'm getting out. Have you ever done that? We all do it. I mean, it's okay. It's like going to an AA meeting. You got to first admit that you have a drinking problem before you can have help. You have to admit you have a trading problem before you can get help. So, see, true technical analysis. I sent. How many of you have ever heard of a guy named Greg Morris? Greg will laugh when I tell his story. I sent him a chart and I said, Greg, look at this chart. Now, Greg is a true technician. He's a technician's technician. And I sent him this chart and I said, what do you think? He sends it back. He says, your trend line's drawn wrong. What? That has nothing to do with it. He said, it has everything to do with it. Okay. Wasn't my question, but I understand. The point being is that the trend is up. So what are we really looking for right now? You're hitting on it. We're looking for a reversal. We're looking for a trend change. That's what you should be scanning for right now, my opinion, is trend changes. EUO, which is short the euro. What am I looking for? Is the dollar really going to get strong enough that it's worth shorting the euro? Is there a trend change about to take place? Absolutely. Will it? I'll let you know in a couple days. Log on to my website, you'll know. And what's happening is that the Dow, I'm not liking the number I'm looking at right there on the Dow right now, but the Dow broke below 10,000 or 11,205 today, which takes back the April high. That's a bad sign. The NASDAQ took back 23.25 today. It's actually below that, which means it's taking it back. The S&P, this is a third trip back below 1218 on the S&P today. We're back to below 1200 with 1197 when we started right now. That means we're coming back. If we come back enough, that enough people will start to do what? Believe that the trend is changing, and it will accelerate the selling. So what should I be looking at? Downside volume. Is downside volume accelerating? Is put options volume increasing? Is it changing? Is the options market? I look at the statistics of the option markets because it tells me sentiment. And if the sentiment in the market starts to change, are you going to change how you scan? Do this. Some of you are going, nope, I'm going to scan the same darn thing every day, and I'm going to prove to this market my scan's right. And the market's doing what? You're an idiot. No. See, the market is going to do what the market does. How many of you can see a double bottom there on DIA? Isn't it funny that you can always see it after it happens? Have you ever noticed that when you go to technical analysis school, that they can show you all the patterns, and when you go home to look at them yourself, you never find one? Have you ever wondered why? Because when you look back, they're plain as day. When you look forward, what are you looking at? You're thinking, maybe so, maybe not. And one of the things that I've learned very early on in my age is, if I can find this, is to step back. And this is a weekly chart of the Dow Jones Industrial Average. And when I step back and I look at what's going on in the Dow this week, does it really matter? Do this. Time changes perspective, doesn't it? At least that's what I tell all of my daughters. Today you hate me. When you're 25, you'll like me. But I just had one turn 25. You know what she told me on her 25th birthday? She said, Dad, you're right. I'm really starting to like you. I said, see, I told you. But what's happening is, if anything, when you look at that longer-term chart of the Dow, it still looks bullish, does it not? But the perspective changes. What if we actually change this to what I call the neurotic time zone, which is an intraday chart? That's the 5-minute chart of the Dow. What are you seeing? I should have sold yesterday before the market closed. And why didn't I sell this morning when it bounced? You start questioning, and I could take that to a tick chart. We can do all kinds of things with this. But the fun part to me is that it's finding ideas, and that's the number one thing I wanted to share with you today. The second thing is technical analysis. Don't make it too technical. You can make this so technical that you never trade. It really is amazing to me. Free stock charts has all these technical indicators. How many of you use free stock charts? I love free stock charts. It's free. I still ask Michael how much it is all the time, actually. But when you look at all the technical indicators, I like it because they're very easy. You can go, there's all kinds of crazy stuff in there. And I'll sit down sometimes at night when I'm watching a boring Florida football game. I went to FSU, by the way. And I'll run some of these things, and I'm like, what in the world are people looking for? And I will take scans that I hear some of you even talk about, and I'll go home and I'll build these scans and I run them, and I'm like, this is just way too hard for me. See, I'm more into the simple. So when you talk about technical analysis, the way I see this is that you go back and you say, all right, let's break technical analysis down. I break it into 3 pieces. The first part is the moving part, which is the patterns. What is a pattern? In other words, if we say all of us just said there's a double bottom there, we could see it. What is a pattern? How many of you use technical analysis? Okay, a lot of you. What's a pattern?